All right, so good. So welcome. Let's gather. We have an hour and 15 minutes together. I think we could use our time very wisely. Lots of things going on in the world. Most importantly, trading is awesome. So that's really good, especially when you compare it to on again, off again summer. But we talked about it over and over and over that that the good days are coming soon. That's going to be September. And here we are. Good. So I have a simple goal. As you know, I started doing these weekly webinars. Now, I've been working with FX Street for 10 years, but we just started doing these weekly webinars maybe, 4 or 5 months ago. And I have a simple goal because, nobody's paying me to do this, so to speak. So I have a simple goal for investing my time with you every week, and that is I want you to make at least 1,000 extra pips simply because you're attending these webinars every Friday with me. That's it. I would like to gather a collection of success stories. How are you guys doing on that goal? Do you have any pips that you can attribute to our sessions as far as the things that you're learning, the strategies that you're gathering, even little things like patience and discipline and timing and trading in the direction of your bias and all these different things that go into being a successful trader? Anybody? Can anybody say, you know what, these 250 pips, they're from Wayne's sessions? These 722 pips are from Wayne's sessions. No? Picking up a few. All my pips are from Wayne's sessions. Well, now. But no, seriously, nobody can say a definitive number. Have you hit this? Have you hit the 1,000? Are you halfway there? Give me some feedback. Give me some sugar, baby. All right, total of 4,000 pips because of these sessions. Well, that's really cool. And those are 2 really good months back to back. Seems to be getting better. 4,000 this week. And Jim, you haven't been around a while, have you? Have you been traveling? I'm like, where's Big Red? Usually here. Maybe you've just been quiet recently. All right. Right. Well, good. Your first week that all 5 did. Well, good, guys. See, that's what I want to hear. That's what I want to hear. I want to hear some success stories. Now, remember, usually your reward, meaning your profit, is going to be a function of one of 2 things. One, you're the amount of risk you take. But that's why I talk about pips, because pips are not about risk. Money, dollars are about risk. You're like, Wayne, I got 1,000% return on investment on my trading account this month. Like, really? You might be taking a little too much risk. Okay. The second thing that can contribute to a lot of your success is the market. If the market's really good, you're going to make money. If the market's not very good, you shouldn't make money. And a sophisticated investor will look for this. If you make money during times when the markets were flat, then the only way you made money was by taking on additional risk, because that's the only way some people think you can outsmart the market is just load up on risk, leverage up. Well, and sophisticated investors will look for that, and they'll say, all right, you did really well in this month, but I looked at the beta. I looked at what the market did. The market did nothing, but you did extremely well, so I can tell when you get desperate, you leverage up and make some big trades. I'm not interested in giving you my money. All right? So right now, the trading's good. Look, the dollar's strong. No duh. The pound's weak. Yup. Commodity currency's weak. Uh-huh. What about the yen? Well, yen's been yo-yo up and down. But like last night, wow, some good trades. Good trades, huh? So there's definitely an opportunity to make some money. Just remember, if you're doing extremely well this week, number one, congratulations. Number two, I hope you stayed patient and disciplined as I've taught you. And three, the market did it, not you. Look, if the market is moving and trending, you made a lot of money. What did you do? You sold in a falling market. Well, who? Well, la-di-da-da, right? But congratulations, you earned it. You did the analysis. You said pound dollar's falling. So you sold it over and 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 over again. But that's your job. So I'm just saying, don't get all cocky. I'm the world's greatest trader, right? No, you're not. The market was falling and you sold. So what? You know, like by definition, that's like showing up. Right? It's like saying, I got on the water slide and I slid all the way down to the swimming pool. Yeah. You know what's impressive? If you can get on and slide all the way back up. Now that would be unusual. But, you know, you get on the thing and it carries you down. I mean, that's what you do. So what I would suggest is just get used to it. This is what you're going to do for the rest of the foreseeable future. Identify the direction of the trade. You see how many trades there are here? There must be 30 or 40 trades. And they're good trades. Some of these trades, for example, I remember one time I shorted, I put my stop, I put my limit, everything was good. I went to the kitchen, I grabbed a cup of coffee, I came back and I was up 50 or 60 pips. I'm like, holy snap. Wow. And September's like that because during the summer, I could have made the same trade and it could have been a day, right? You remember sitting on your trade for a day and you come back and you're like, am I still only up 22 pips? Right? Now it's like, holy smokes. I think I was gone for 6 minutes. So, cool, man. The market giveth, and the market will taketh away. So one of the things I was talking about with traders recently is, how long should you have a track record of trading, a track record of success? How long should it be? How many months or years do you need before you can give it to an investor? Is anybody asking such a question? How long do you have to be successful before you can raise money? Is another way of saying it. What would an investor look for in your trading history? Is another way to say it. Nobody has that question? So all right, so no one's really ready to go pro then. All right, everyone wants to know how to do a 5A cross. Fine. But the answer here is an investor wants to see enough trade history, right? They want to see enough trade history where the market conditions have changed. So let's say, let's say this year the vast majority of your trades were selling the Euro USD and you made a ton of money. Cool. Good for you. Pretty obvious, but fine. But what about the year before? Were you trading then? Well, the year before, you should have been long the Euro USD for very obvious reasons too. For example, we were still doing quantitative easing. Yes, we were tapering, but we were still doing it. So anyways, an investor wants to see in a trader's track record that they were in a market, they took low risk, made good reward, then the market changed, and the trader was quick to change their strategy and traded in the new market conditions properly with low risk, reasonable reward. And then 6, 9, 12 months later, the market conditions changed once again, and the trader adjusted once again appropriately to the new market conditions and took low risk and made reasonable reward. So like 6 months probably wouldn't be enough, but 3 years probably is enough. So it depends on what the market conditions are. And what I'm trying to get to is nobody cares how much money you made. Wayne, I made 1,000% in the last 6 months. So why would I care? Well, you might want to invest. Why would I want to invest in that? That sounds dumb. So, there's a lot of other questions that go into trade history, but we won't focus on that today. It seems like most people want to just know the basics, so we'll do that. Let me get rid of some of my trades here. Boop, boop. All right, cool. This is, I think this is our short yesterday. Where's my mouse? I think this is the short yesterday, right? Drop down, and then the pullback. I can't even, it's too far ago. It must not have been yesterday. Well, yeah, drop, and there would be the short there. All right, cool. All right, so how we want to go about this, huh? I guess zoom in would be nice. I've lost my mouse. Too many screens, man. It's a frustrating feature. There it is. I have this mouse, and if I go right, if I keep going right, guess what? The mouse shows up left. See? And if I go left, it shows up right. And it gets really confusing. I wish it would just get stuck on the left or get stuck on the right. So anyways, and I can do the same thing this way. I can go up and the mouse shows up on the bottom. I'm like, oh no. My monitors are not configured wrong, Wyatt. Your monitors are configured right. I've never been so insulted, Wyatt. How dare you? No, I think it's some smart feature of the software, and I don't know, too smart for me, I guess. All right. Yeah. So, what time frame do you trade on? You're a 1 hour guy, huh? Okay. 1 hour. 1 hour and 10 minutes. That's interesting, Mikey. I don't have 10 minutes. But I can see how that would be interesting. Daily. Which one ever fits? Ooh, Wyatt. All right. Well, all right. Let me go back to the history of the world here. Back in March or April, we had the pound dollar rising up into our fib area. And the first area to watch was the 382. But the trade plan was somewhere between the 382 and 618 Fibonacci retracement. We would sell the pound dollar, as you can see. Then by June and July, we started topping out at the 50% Fibonacci retracement. And I mean 50%. Let me zoom in a little bit. Huh? Like, no joke. Now, let me ask you, do you think that's a random walk, or do you think large institutional investors were watching that 50% retracement? Random? They're definitely watching it. So we talked about that in March. It happened in June, July. All right, cool. But it's not confirmed until here, and you can see I have this marked. So by the end of July, almost the beginning of August, we have a confirmed level of retracement. And so we have this planned now, the retracement up, the retracement down. Let me back out so you can kind of see. All right. Down, 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 up, up, sell, down, 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 down. Okay? So I hope you're following me here. Then on the smaller time frame, you have the lower low, lower high scenario. Now, I didn't want this lower high. I'll be honest with you. I was hoping this would be the lower high, but we got the spike, probably, whatever. It was something. Who cares what it was? All right, but then we have the down, 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 which now it confirms the lower high and gives us the lower low. What's the key word that I've taught you? Okay. I've been teaching you this, guys, every week now for 6 months. Okay. All time frames. This is a daily. So it made the lower low, up, 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 hits the 618, and we've been hardcore short ever since, right? This is our trading week. And it's been glorious. And I just want you to see that it's a lower high of a lower high of the top in a trend that was planned out since March. And that's a swing trade. How does that make you feel emotionally? So I've been watching this almost on a daily basis with people since March. And sometimes the markets move too quick and you don't see it and you don't move and you're frozen. But then sometimes the market moves too slow and you forget and you don't see it. This is why you need multiple time frames, because it is very important to know where you are in that whole process. So I think we're going to come down to this purple area, which I've already identified for you guys on Monday. How interesting, huh? Now, the theory is this is supposed to fall quite a bit, right? Can you see where we have it? But that's just pure Fibonacci in play. That's just what the Fibonacci theory says. It doesn't mean it's true. So that's a lot of time to predict. Right now, all I'm thinking is this purple area, and then probably another lower high, lower low, and then we'll hit the double bottom, and I'm hoping it makes a lower low, lower high, lower low. But at some point between now and February, I'm expecting the Bank of England to suggest that raising interest rates are imminent. And more importantly, they're not just going to talk about it, they will have the data to prove it. Would you guys like to see a video of me explaining exactly why? I mean, why February, dude? Are you thinking February already? Uh-huh. Yeah, that's true. So let's do a search. I probably typed in what? BOE? BOE. Let's do it that way. How to know when the BOE will raise interest rates and why? How many people would like to see that one? I will share the link with you if you promise to leave a like, even if you hate it. Do you promise? Cross your heart? If you actually like it, will you leave a comment? Thank you. And if you hate it, leave a like, but don't leave a comment. Leave your negativity at the door. Sure know what I'm talking about? All right. Well, thank you. And so, yeah, so I actually think about things 4 or 5 months in advance. Yeah. Oh, yeah. But I trade a 1 minute chart like nobody's business. So you got to do it all, my friends. So, anyways, there we are. Any questions about this? Can you see how, it's like you can see how I got multiple time frames drawn with the actual trend line. So high, low. Now we're in this area, lower, low, lower, high, lower, low, lower, high. So this is rolled over like an old man easing into a hot bath. The Bank of England. Yeah, Warren, I do like the 1 minute chart. Yeah, well, that's not the question, Igor. It's why and how to know. And I think there's some interesting logic in that video where you say to yourself, you know what? I never thought about that, but it just totally makes an unbelievable amount of sense. And I'm telling you, the world is going to be shocked in January and February. Just shocked. Oh my gosh, look at the data. Now the Bank of England has to raise interest rates. Yeah, but we already know that. We knew that 2 months ago, 3 months ago, that the world's going to be shocked in January, February, March. Cool. So it's not that shocking if you already know. And again, I love the analogy of the shaman of the village comes out and he's got like a skull in the end of the staff and he's got tiger's claws and teeth on his necklace around his neck and some crazy makeup on, and he says, give me your money and your virgins or I will make the sun go away. And then what happens? The solar eclipse. Well, wouldn't it be nice to have a calendar of the solar and lunar cycles? And you're like, man, I got all this gold and all these virgins. Nice. So it's not amazing when you know. It's only amazing when you don't know, right? So I'm trying to bring the wizard from behind the curtains out into the light by giving you the knowledge. Joseph G. and Warren, you guys don't know how to trade a 1 minute chart? Really? Cool. I mean, this is why I'm here. I don't know what you don't know. I'm happy to share. Oh, trading it now. Well, you want to do some of that? All right. All right. Look at this pound here. Let's go to this chart. Are you bullish or are you bearish? Cool. You're only allowed to sell. Are you okay with that? Okay. So, do you sell at support or do you sell at resistance? Wow, see? It's not hard. That's difficult to see, right? But anyways, we got a resistance in the area in there now. Well, on this one, I think it's going to wimp out here at the daily S2, and it's oversold. So this might actually be the end of the trail for now. So it might be a bad time to trade it. Okay. All right. So let's go to a fiver. Okay. One thing you want to look at is where's the 5 EMA on the 15? You want to mark that? And what time is it now? So in 1 minute, it's going to move. Good. So we need the new 5 EMA. So let's wait 1 minute. Take a sip of coffee. All right, there's our new 5 EMA. I'll just mark this just for color. Looks like it's right around that pivot anyways. Move to the fiver. Is it set the fall on the 5 minute? No, probably not. Okay. I'd rather prepare to sell this when we're up into this area. Okay. Okay. So like you see this? What's interesting about this? Lower low, lower high, Stokes kicker. So it gets set up on the 5. Okay, on the 5 minute. But once it's made the lower low and you're prepared to sell it on the 5 minute, you want this to kind of get up and elevated and nearing the sell zone, but you also are near the daily pivot. So let me zoom in a little bit more. You're nearing the daily pivot. Because of the lower low, you already have this set up. So you're in your sweet spot somewhere between the 382 and 618. And again, it doesn't highlight because it's just hard to see. So therefore, you drop in the 1 minute. Okay. And there you go. It's either here or the double top. You are not alone. 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 Just the other night. Thought I heard you cry. Okay. So that's the beginning. Why? That's where you would have sold. Is it crucial to use stochastics? Nothing's crucial. Yeah, totally sell right there, dude. Easy. Do you notice it's a 382 Fibonacci retracement of yesterday's trading range? Yeah, Mark's right. Mark, no indicators needed, but also it's not that you need to not have indicators either. Okay? I can drive a car. I can drive a car fast. I can drive cars around corners. I can drive cars backwards. I don't need a speedometer. I don't need a tachometer. I can tell, I can feel, I can see. But sometimes they're helpful if you know how to use them. Sure. I'm okay with that, Mark. I understand most of the time we have confirmation bias anyways. But anyways, so we're on the 1 minute chart now. And then you have confirmation, right? Lower low. Right? Lower high. You can dump it another one if you wanted to. Do we have an oscillator? No. The next oscillator opportunity, or at least heads up, is here. Check the fiver. No, not even good on the 5 minute. So you wouldn't do this one. Come on, don't do both. MT4. Okay. So we're consolidating here. And the reason it's not going anywhere is there's just no new levels of resistance. But notice we keep failing to make higher highs, and we keep making slight lower lows. So nowhere in this game is it really saying time to get out, right? And then the market starts to move. Let me see if I can get in here now. Now I generally stop paying attention to oscillators. They're too slow. Even though my stochastics is sped up super fast, it doesn't matter anymore. So I'm going to have to change the colors here because this is so difficult to see on top of the green, because the green is the pivot point. Suppose I can just kill the pivot point, right? Let's do that. All right, good. All right. Okay. Low, down into resistance. Nah, this is going to be difficult too, right? Low, mark this one. Okay, down here, new low. So low is down here now. You know, maybe I should try to draw this. It's a little slow. But this, as soon as this makes a low, right? So you're still here, okay? You're still on the orange line. You go back and you identify the old support, and in the future, it should become resistance, okay? Let me try to zoom in here again, okay? So the purple area, when you're still down here in the red, you're already getting prepared to sell a retracement to that gray zone. Okay, so it comes up and then you sell. You already knew it was going to be there. It makes a new lower low. What you do now is you take the old support, drag it across. This is your new future sell zone. But you're doing it when you're low. Comes up here, you sell. So on and so forth. Now, I'm a little worried where we are. I noticed as soon as I grabbed the mic and we were going to talk about scalping. Scalping, you have to really know your support and resistance, right? I mean, that's what it's down to, right? And daily support too, which is the most important daily pivot. And right below that is a psych level 5150. Look, it's a psych level. It's going to be important. So I have a feeling this is going to go all the way back to pretty close to 52. So bad time to scalp. But you can see all these little moves, right? Counter move to the moving average, sell it down, right? What does it do? Counter moves back to the old roll reversal area, right? Pretty close, not exact, but pretty close. You got to be ready. It's a scalp for crying out loud. Makes a new lower low. You would have been looking for a retracement into this area. And the market's so aggressive, it barely retraced at all. But it is using the 21. You see that? Sell it to 21, sell it to 21, sell it to 21, sell it to 21, sell it to 21. I don't think it's going to work this time. And you know, it's interesting. I wrote an article for a magazine a long time ago, the difference between a good trader and a great trader. And what I said is a good trader will make, let's say he'll make 9 out of 10 trades profitably. That's a good trader, right? 9 out of 10. Okay. A great trader will make 9 in a row, but not make the 10th one. Because they'll see something like that, like, really? Midpoint psych level and daily support? I think I'll take a walk. Okay. But just for sake, do you want me to just pretend there's no support? Because it might come down. It might break. Do you want me to just pretend I'm not that smart? I don't mind. I'm just saying we'll short it for fun and see what happens. Okay, I just generally don't what's my first question? Are you a bull or a bear? Okay, we're a bear. Do you sell at support or do you sell at resistance? You sell at resistance. Well, we're kind of at support, you know, but as long as you understand that this might be where I take a walk, we should, or at least maybe we change and wait for the 5 minute to cycle. You see what I mean? So if you're going to use this time frame, it's going to go up to about here. So we'll use this one and then maybe come down. Is anybody lost? Because I'm trying to teach you how to trade in 1 minute, and you need to know support and resistance extremely well. Okay? Okay? There is resistance here. I'm worried we're going to get a 1 minute inverse head and shoulders, but what Stokes would I prefer to see? I prefer to see overbought. Okay? But even though we're talking about trading the 1 minute chart, do you believe the market is actually focused on this 1 minute chart? Do you believe like the technical analysis is really valid on a 1 minute chart? Like somewhere there's a quant knee deep in 1 minute charts? I mean, by the time he does the analysis, it's already too late. So, for example, what about the 5 minute chart? What about that oscillator? Well, this whole move started here. All you had to do, guys, on the 5 minute chart, remember, for most people, 5 minute chart's just way too fast. Right? And all you had to do here was sell. And then that's it. Why is GDP useless? Because it's old data. So anyways, look at this. It's already starting to come up. But anyways, on a 5 minute chart, what I would like to do is sell this purple area. Huh? So it might even have to do this. And this is going to mess up our scalps because the way that I scalp is I don't scalp. I only scalp in the direction of my bias or let's say the way that the market's trending. That's probably a better way of saying it. And I think the market's trending down. Okay. So the general idea here is this will probably go up. It's probably going to come down. And then it's probably going to go up. And then we'll short. And we'll continue shorting. Does that make sense? Good. So this purple area is a sell zone. This purple area is a sell zone. This giant purple area is a giant sell zone. So do you want me to sell it and lose money? No, why not? Doesn't look good here, does it? So one of the things that you need to do using a 5 minute chart now, remember I'm backing out using a 5 minute chart. Wayne. How do you want to do this? I'll do it this way. Well, that looks fine. And then let me mark this up. So long story short here, what I'm trying to say is I I love trading the 1 minute chart, but I need to use the analysis wisely on the 5 minute chart, the 15-minute chart, and usually the hourly. So I ask myself, where's the 5 EMA on the hourly chart? Oh, right where I want to sell it. You see? Here's the tip where I actually want to sell it. And there's the 5 EMA. So when is the 5 EMA going to move? Because when it moves, it's going to move down a little bit out of my perfect little purple sell zone. When is it going to move? When is it going to adjust and update and adjust? Yeah, 45 minutes from now. That's probably enough 5-minute candles for us, right? You notice I've kept you out of 15 or 20 pips of a bad trade? Isn't that cool? Where as soon as I want to teach you how to scalp a 1-minute chart, I open up the 1-minute chart and I say, oh, it's probably going to go up. Bad time to scalp. How long did that take? Less than 5 seconds, right? Which is kind of cool, isn't it? And that's because, I would clearly see this as support. Daily support, too. The biggest daily support there is, and 51.50. Someone's going to take profit as a bear, and as a bull, someone's going to buy it. That's all it is. Think about it. This short here, guys, was about 52.50. Where it bottomed out was about 51.50. It was about 100 pips on a 5-minute chart, dude. Mark asks daily, question mark, 5-minute, question mark. So what are you asking? Do I use the daily in my analysis for scalping 5 minutes and 1-minute chart? Oh, yeah. Yeah. I'm always going to trade in the direction where I think the market's trending. I'm not going to be a counter trend trader. I only counter trend trade in very specific situations. Cool. By the way, quite a few people have signed up for the fundamental analysis training course. And Trader's Way has kicked in a 51% discount for those that open up a trading account. Is anybody interested in that? Anyone missing fundamental analysis in their trading? So what you do is you put $500 in a trading account at Trader's Way, and you get a $500 discount from the training course. That's cool, right? So look at this. It's heading up. So I'll send you a link for that in a second. Okay. Well, even the EMA stuff is not really that important here. I'm on a 5-minute chart. The world really doesn't revolve around a 5-minute 21 EMA. It just it fits into what you want to see. You know what I mean? It's helpful, but because we already have certain assumptions about it. Because if you use it on a 15-minute chart, I would sell it hardcore off that 21, wouldn't I? Without blinking, without hesitation, I'd fire for effect. But on a 5-minute chart, is that really what's happening? No, it's probably more like the 3A2. It's probably more like 5180, right? The 80-20 type rule, where anyone that's trying to defend the 52 area, they're going to start defending 5180 first because they don't want 52 to be touched. So there's going to be orders there to drive this down beyond 50. And in fact, we'll be on our way down to 5120. Correct? Maybe even 51 and then back up to 5150 and then down to 5080. That's just technicals, though. There's more to trading Forex than just technicals alone. Fundamental analysis training. Yeah. Training.fxbootcamp.com. If you want to become very... Are you interested in how commercial banks would manage their balance sheet and why? How about going through an actual FOMC meeting and knowing who discusses what and when and what order, what the agenda is? How would you like to know the money supply and how the Fed not only adjusts interest rates in the open market, but how this affects the actual money supply and being able to calculate it? What's the difference between the Fed funds rate, the discount rate, the prime rate? You know the difference between a Forex future, a Forex forward, and a Forex swap? If there are giant question marks to these questions, I'll learn more. So, training.fxbootcamp.com. Like I said, there's a 51% discount for Traders Way clients. Boop, boop, boo. All right. Oh, and I should preface this. I was asked to make the course. It's not like I made it and I'm out selling it. And I think it might have been quite a few people in this room that said that was missing and that they would be interested in me putting together that course. So I put together the course. And I'm adding to it too. I got some more to do. I'll do them soon. So anyways, you asked for it, I did it, so now you have to sign up. Cool. So we're still waiting to scalp. Isn't it nice to be smart money? We're pretty close. Remember, I want to sell in this gray zone, but hopefully or go to Harvard. Yeah, I'm studying at Harvard right now, and it's hard. Yeah, I guess. Holy smokes. Holy smokes. I guess so. Let me tell you, I'm like, holy smokes. So, like, I lived the life where my son's at Boy Scouts, and the meeting's going on, and I'm outside with a laptop, and I got my cell phone connected to the internet, and I'm listening to lectures, and I have my textbook, and I'm wearing glasses, and it's getting dark, and doing homework is a fun thing, but what else am I going to do? Just sit there and like an idiot for an hour and a half? All right, so you have permission to pull the trigger. I would go a little more elevated on the fiver, go to the Cinco, and you got permission if you want to sell it off the 382, you can. So for fun, we'll see which one works. I don't mind. It's only money. And then we'll see if the 382 was it, the 50%, or the 618. Now, hopefully one of them works, right? Yeah, Pao and Demeter, I'm trying to get beyond that. I'm just trying to show you technicals. Okay. I'm just saying at least now we've waited for a 382. Now we know the 618 is more preferable. Okay, I understand that. I recognize that. But if you're bearish and aggressive, you should be ready to sell off of this. Look, this is the gray zone that I did a long time ago, like when we first started discussing this strategy. That's the old previous support. So it should possibly, if the market wants to, use it as resistance. It's called a role reversal. It used to be support and now resistance. Okay? But I know it's not the best, but this is what we're observing. And remember, when you're trading a demo account, most people, and I mean most, 95% of traders use their demo account incorrectly. What they do is they sit down, they trade. And the interesting thing about it is, generally speaking, they suck. Pardon my French. And they just practice sucking. And then when they don't make money, they just throw in another strategy and they suck at that for a lot. And then they throw in a third strategy and a fourth and a fifth. And they keep changing the variables and they have no idea what they're doing, and all they're doing is reinforcing all their bad behavior. Whew. What I would like you to do is find any strategy you want in the world. I don't care what it is. Something like what I do, something completely different from what I do. It doesn't matter to me. But what you need to do is practice and observe and gather intelligence and formulate strategies and find out what seems to work and then test that more and get more data. So, for example, if you were scalping and you were trying to trade in the direction of the trend, ask yourself, how important is the midpoint strike level? How important is the daily support? Is this actually going to reverse the entire pound dollar market? It could. That's support. But if the trend is going to continue down, what seems to work? What are the market conditions? Is it extremely bearish, moderately bearish? What will actually act as resistance if it does make a lower low? Is it the 382, 50%, or 618? What were other things that were involved in being the future resistance where you should be selling? So on and so forth. Testing, gathering data, and learning from what you're doing is the point of a demo account. And consistency, as Mark says, is much more important. But to have consistency, you must have control. Trying 9 different trading strategies, and in particular, all in the same day, shows no control or consistency, and you're never going to develop any confidence. Yeah, I think my first demo account I traded for 2 years. So far, how does my entry look? Okay. See this purple area? If I lose money on this trade, it's going to be because of this purple area. I already know where I'm going to lose. Isn't that cool? And how long ago did we develop that? Quite a long time ago. Okay? And what's going to happen? Well, I already drew that for you too. See? Comes down, then it goes up higher. And no, you know what I'm going to do up here? I'm going to sell that too. If it comes up here, I'm going to sell that too, and we'll find out which one was the better entry. That's called testing. Not back testing to find out what worked a month ago or 2 months ago or 5 months ago and then trying to fit that into the future. Well, guess what? What I did last year is the exact opposite of what I did this year. So why would you use last year's strategy this year? Oh, but I got such good results back testing. Yeah, because you finally figured out what happened last year. Why don't you spend your time figuring out what's going to happen next year? All right, so I'm sorry, but looks like I'm going to make profit pretty quick here. I apologize. I was hoping to get a better learning experience. My bad. It's not supposed to be this easy. All right, it might bounce here. It might bounce. Get ready. This is where you jam your stop, right? Well, of course GDP was better than expected. We already expected that. I mean, this is why the Fed's going to raise interest rates. I mean, we already know. That's last quarter, dude. Who cares? What were you going to be? Was it going to be bad? If you just do your analysis, guys, do your fundamentals. How have jobs been? How have prices been? How has productivity been? Been all pretty good. Well, of course GDP is going to be good. We already know that. So anyways, here comes the giant bounce. But I'm going to be stubborn for the sake of learning. And we're not talking about risk management here. We're only talking about scalping off of resistance. So I'm not going to adjust anything else. Notice, though, and here's part of the learning process, guys. Look what happened when we touched the daily S2 again. Was it respected? Did people take profit on the retest? Was there potentially new orders in the market there? Do traders actually use daily pivot points? See, this is how you use a demo account. So this is a live account, but this is how you practice. The trading part is, I don't know, boring. Gathering the intelligence is interesting. What just happened? Well, even after a surprisingly good GDP, we came down, we hit S2, and it stopped. Look, it wasn't 51.50. It was 51.56 and a third. Really? 51.56 and a third is really that important? Yeah, apparently so. Why? It was a daily S2. How did we behave on the previous pivot? Much differently. Blew right through it like it didn't exist. So, what's important and why? All right, see, it's gonna wimp out on us. I knew it. We'll see. Okay. Now, are you a new scalper? If you're a new scalper, you're going to prepare it this way, and you're going to get ready to sell it. I might as well just do it pre-news. Okay. You're going to scalp it here if you're a new scalper. Okay. Because if it is going to make a lower low, it's got to head down now. You get it? If on the 5-minute chart or a 15-minute chart, if we are going to fulfill this idea of making a lower low, It probably should do it now. Now, of course, we have plan B, which is to sell it up even higher. Okay. All right, so Joseph asks, when do I move my 1 minute chart to break even? Okay. I didn't really want to get into that because I want to talk about the entry, but let's talk about the risk management. I'm scalping. Why would I move the stop to break even? That sounds like you're trying to let your winners run, which is a little different than scalping, isn't it? See, look at there's the new scalpers right there. Beautiful. No, I would just take profit right in my cluster here. You sell at resistance, you get out at support. You sell at resistance, you get out at support. Sell at resistance, you get out of support. Okay. I only trade in the direction of the trend as a way to try to reduce the amount of opportunities I have to lose money. Some scalpers will swing both ways like a broken gate. They'll sell and buy and sell and buy, buy and sell and sell and buy and buy and sell and sell and buy. And I find when I do that, I'm late on both trades. Because I'm long here, I'm trying to wait to see if it goes higher. And it doesn't go higher, and then it drops. So I got to take profit, then stop and reverse, and then sell. But now I'm in the middle of the range. And then it comes down, then do I get out here? Do I get out here? Do I get out here? When do I take profit? Oh, I'll take profit here. But I was late, so I gave up 30% of my profits. And then I'm late here, and I've given up another 30% of my profits. And so there's only 30% profits left. You understand? So to mitigate that scenario, I decide if I'm a bull or a bear. And if I'm a bear, I sell at resistance. I know where it is. And I'm not waiting for it to go higher. I already know where resistance is. So I'm ready. And I sell it much closer to the actual resistance. And I already know where support is. And I'm not worried about it maybe going lower. I just exit. So now I get much closer to 100% versus only getting 30%. Okay? And the only way to know stuff like that is to analyze your data. And I find if I scalp in the direction how about this? If I scalp in one direction, whatever the direction is, I tend to make a lot more money. Okay. So look at the importance here of support and resistance. Are we learning anything? We observed support to begin with, so we knew it was a bad place to sell. Then we identified 3 levels of resistance. We waited till we got to the second level of resistance, which was our 382 Fibonacci retracement. So I have a cluster, price action and fib. We sold it and almost straightforward made 20 pips. Is 20 pips a reasonable scalp? How many people would say 20 pips is a good scalp? Now, it took 7 minutes. Okay. So now we have the double bottom scenario. So we know a bull is going to want to get in on this, and it's going to take us to the next level. But I've already identified the next level as the next place to sell if you're a bear. And we did that on the 5-minute chart first, right? So we already have it coming down for a while, then going up. So it seems like GDP, all it did was extend us down a little more than it should have. And then we just go right back into the area, the direction we're going. Okay? So now we got to update ourselves. Where are the EMAs? So it still looks like it's going to go up to a 618 on the 15-minute chart. And then we'll try to sell that. So our 1-minute analysis is still working just beautifully. Okay. Remember, I'm not doing risk management and stuff, so that's why we didn't get out and stuff. I'm okay with that. It's not the point. Okay. I'm not trying to prove I know how to trade. I'm trying to prove that you can do your analysis on multiple time frames and drop it down to an entry on a 1 minute. Because remember, the hardest work in trading is the entry, really. I think, especially if you're scalping. So make sure you're taking notes here. Are you a bull or a bear? Are we at support and resistance? Okay. In this case, we're a bear. We're at support, so not a good time to trade. Where do we sell if we're a bear? Do we sell at support or do we sell at resistance? Resistance. Great. Identify 3 levels of resistance. Aggressive, moderate, conservative. Everybody wrote all of that down? This is pretty specific stuff, right? Do I sound like I read 3 or 4 or 5 books doing research on how to scalp and put it together in my little PowerPoint presentation and then regurgitate it to you like I know what I'm talking about? Or does this feel like I've just sat here for blood, sweat, tears for years trading? Well, I'll tell you, it ain't natural, my friend. Okay, we're coming up to the next level. We got a red candle. Really? Yeah, I learned the hard way for sure. Holy smokes, eh? Yeah, I've traded like this for a very, very long time. Do you know how I learned how to trade on a 1 minute chart? It bothered me that I knew how to trade many different strategies like carry trading, swing trading, spot trading, that kind of stuff. But it was common knowledge. Everybody knew that you couldn't trade on a 1 minute chart. It was all noise. And I said to myself, well, that can't be completely true. But I didn't know how to trade on a 1 minute chart. Right? So this is back when I was spending, $30,000 or $40,000 a month on my staff. So I had staff to coach. So I said, I'm going to take 1 year off from and from my normal sort of trading, and I'm going to focus on the 1 minute chart only. And so I traded the 1 minute chart exclusively for about a year. Is it that much different? Yes and no. But I will not, and I want to make this clear, I will not trade the 1 minute chart unless I've done my analysis on all other time frames. Do you guys remember what this orange line was? That was the 15-minute 5 EMA, or 15, or it could have been even the hour. But I'm looking at moving averages on multiple time frames. I'm looking at pivot points, which is time frame independent. It's a market support and resistance indicator. But did I ignore the daily S2? Hell no. Right? I'm looking at psychological levels. I'm looking at price action. I'm looking at things like roll reversals, higher highs and higher lows. But, I think if you took away my 4-hour chart, I could probably survive on the 1 minute. But I really would like my hourly chart. I would really like my 15-minute chart, my 5-minute chart, so I can trade my 1 minute. Okay? If you don't look at the hourly first, you can't trade the 1 minute chart. Okay. All right. Oh, cool. Yarek, what is your point of view? Don't worry, I'm not going to cut you down, beat you up. You just, all you look at is the 1 minute chart, nothing else? I think you could do that, but I believe, and this is my point of view, from doing nothing but the 1 minute chart for a year, that you will miss key levels of support and resistance. That's all. Okay, and maybe you're a better trader that way. But I'm telling you my point of view from my experience, and I'm pretty tenacious in what I do. I'm not a lazy person. So I go to pretty extreme levels to figure out what works. And I don't mean just profit. I mean analysis. But anyways, I do things like pay attention to where the 5 EMA is on the hourly, but also where it's going to be 15 minutes from now. So remember half an hour ago, I said, where is it and where is it going to be? That was important. Now it's going to change in 14 minutes. Where's it now? Where is it going to be? Where's that dynamic level of resistance in the near future? Because it's going to act on my 1 minute chart. Okay? So I like to pay attention to that. So basically, and this is what will blow you away, this 200 EMA is the hourly 5 EMA. Your head just exploded, I know. But I'm keeping an eye on that, boy. So you can, over a different time frame, moving. Yeah. So one thing that I did, Johnny, so John B says you can use overlay different moving averages and stuff. I haven't used it in a long time. I was thinking about doing like a book or something on three-dimensional trading, but I created a three-dimensional charting setup so I could watch 3 different time frames on my 1 minute chart. It was awesome. But I just never followed up with it. I'm a busy guy. See, here's the problem, guys. I'm busy enough trading where I don't really have the time to sell you stuff because I don't have the time to do much. I'm busy. So I hope that's a nice thing. It bounces like it's refreshing. So, like, phew. All right. So a bull's going to start to get ready to buy it. And that would move us up because I was hoping it would go a little higher, right? I guess I probably should have shorted the 50%. We're just talking too much. Okay. So a bull's going to buy it now. Oh, we have to wrap up. We do, don't we? Oh, man. See, I could sit here and do this with you guys for probably 3 more hours, probably 5 more hours. Eric, is an ABCD? Of course it was. Look, people are buying it. Shocking. So I guess we have to go. It was great working with you guys. I hope at least there was an opportunity to learn something there. Thank you, moderator. I hope you have a nice weekend, moderator.